I'm Bonnie Lind with Lind Insurance Services, and I'm here to talk about whole farm revenue protection policies, as well as microfarm policies for Hawaii growers. The 2014 Farm Bill mandated a whole farm option, so the USDA's Risk Management Agency made it available nationwide to growers of all types of crops. Growers can insure all crops under one policy, rather than signing up for insurance crop by crop. The Whole Farm Revenue Protection Policy provides a coverage option for diversified growers, including livestock and specialty crop growers. This includes those that may sell their crops at local farmers markets and those that direct market. It's available to those growers who already have crop insurance options, as well as growers previously excluded from USDA crop insurance products. Growers previously without crop insurance options now have a plan of protection available. The program accommodates expanding operations with new rules and improved limits, and organic growers with high-value crops may benefit from whole farm or microfarm revenue coverage. Whole farm and microfarm revenue protection policies can cover against losses of revenue due to multiple causes, such as market glut and reduced pricing due to inconsistent growing conditions, missed market windows due to weather conditions, and other causes of production or revenue losses. The policies feature coverage levels of 50 to 90% of approved revenue. Premiums are subsidized and replant payments are available for annually planted crops. A grower can carry other USDA multiple peril policies alongside their whole farm revenue protection policy. Growers may provide their adjusted revenues either on a fiscal or calendar year basis, and claims are finalized when taxes are filed. Revenue policies cover loss of revenue due to adverse weather conditions, wildlife, earthquake, volcanic eruption and tsunami, insects and plant disease that are not controllable, wildlife that is also not controllable, and decline in market prices that result from any of those causes or other causes not man-made circumstances. A grower must insure all ag commodities generating an income that are reported on his federal tax returns. To be eligible for premium subsidies, a grower must be compliant with highly erodible land conservation and wetland conservation compliance rules. A grower who wants to receive subsidies should be compliant at the local FSA office by the billing date for their crop, usually August 15th for most Hawaii crops. There are limits to the amount of approved revenue a grower can insure. For whole farm, it's $17 million of insured revenue. Coverage of expected revenue from animals, animal products, greenhouse or nursery products is limited to $2 million. And the grower must meet diversification requirements if they grow potatoes. For microfarm, it's $350,000 approved revenue for growers who are newly applying, and $400,000 for growers who are carrying over a previous policy and expanded their operation. Growers of a single commodity may not carry whole farm or microfarm if there's another MPCI revenue plan of insurance. However, there's no revenue plans in Hawaii other than whole farm and microfarm, so this provision isn't something to really worry about. However, potatoes may not be insured as a single commodity under this program. To participate in these programs, you'll need to provide federal tax documents to your crop insurance agent. For whole farm, you'll need to provide 5 consecutive years of Schedule F or other farm tax forms, unless you're a new farmer, and then you can drop that to 3 or 4 years. Prices used to value commodities have to be based on guidelines for pricing in the policy. So price documentation is required. Market readiness operations, such as on-farm activities that occur on or near the field that are the minimum needed to get the crop out of the field and make it market ready, can be left in the allowable revenue. If you're participating in the microfarm policy, you'll need 3 consecutive years of Schedule F or other farm tax documents. Commodities are not assigned individual pricing, however, you may be asked for price documentation. Market readiness and post-production operations such as canning, freezing, and processing can be included in your allowable revenue, and it's used when calculating your farm's insurance guarantee under microfarm. As mentioned earlier, approved insurance providers or your crop insurance company may approve your operation as an expanding operation, up to the higher of 35% or 500,000 more than the historic average if you're a whole farm applicant. If you're a microfarm applicant, your farm operation has been expanding over time, you'll be allowed to increase your approved revenue based on indexing procedures. This is a simplified loss example just to show that your approved revenue times your coverage level equals your insured revenue. And we compare that to your revenue to count after your taxes are filed. And in this case, we see a $30,000 loss payable. Over time, this program has become more and more affordable. Premium discounts are given for growers with more than one commodity. Premium discounts increase for an increasing number of commodities grown on the farm, and premiums are subsidized for growers with the current conservation compliance certification on file at the FSA. Additionally, premium credits are given for growers with multi-peril policies. This would apply to a coffee, papaya, banana, macadamia nut, or nursery policy, and premium credits add up to make the addition of whole farm revenue protection very affordable. Additional subsidies are given to beginning farmers and ranchers with 10 years or less experience in farming. Veterans discharged within the last 5 years also receive additional subsidies. With the recent addition of the 90% coverage level, coverage available under these programs is now the highest ever offered. Diversification discounts, new farmer credits, and subsidies make the coverage affordable. There are now more options available to more growers. The deadline to apply for whole farm in Hawaii is November 20th for late fiscal filers, March 15th for calendar filers, and early fiscal filers. To participate in microfarm, you should sign up by April 15th, and please give your agent a few weeks to get the applications ready before these deadlines. To get more information, please contact a whole farm agent. You can find an agent at the RMA's agent locator at rma.usda.gov and click on Find an Agent, or you can request a quote from me at hawaiicropinsurance.com or email me at bonnielind@agsecure.com. Thank you very much.